AI is still the hottest thing there is, but in the background, quantum computing is coming. And lucky me, Rigetti is in my portfolio, as you know. And yesterday, Rigetti was up 30% on the news that US is backing it with $100 million. And they will be back much more than Rigetti. They are backing the industry itself, as this is the new thing for the future. You're listening to the StockInvest.us podcast, Trading Tips with Jim, as we head into week 22.
Tick-tock goes the market clock. Bulls run wild, bears don't talk. Up or down, it's a coin flip game. Buy low, sell high, don't lose your grip. Stay sharp, stay fast on this trading trip. It's Trading Tips with Jim. Win or learn, never forgive. Stack your knowledge to the brim. Tune in now, let's begin.
First thing on the agenda, I have to admit that lately I've been a lot wrong. And that shows in my portfolio, despite Rigetti doing, as I said, very good yesterday, up 30%, and showing the signs that it will continue upwards today. Overall, my portfolio hasn't done too well lately. First off, NIO, for instance, which is in the $1,000 challenge, despite giving the best quarter results ever yesterday, beating the analyst estimates by a mile, it fell and seems like it will continue to fall today. More about that at the end of the podcast. But that being said, it's not just in the $1,000 challenge. I have a huge stake personally in NIO, and it controls a huge part of my portfolio, maybe too much. In the bigger news, SpaceX is the most anticipated IPO coming up, and probably will be the most valuable one. And is SpaceX where you want to put your money in the future? Well, you have to think, what is the next thing in the human race? Is it going out in space? Is it habiting in the moon? Is it habiting in Mars, etc.? I don't know. I just know that technology is changing at a very, very rapid pace. And human, as always, wants to innovate and move further. But one thing that we absolutely can look at is the AI race, and it is pushing on all engines. Nvidia delivering top results. Even they had to take a little fallback after the results, but just showing how much money is going on. And there is a disruption in the market, is inevitable that it will be. Everyone is saying that the economy will be bad, but the US is just pushing forward. But it's mainly these big companies delivering one good quarter after the other. Money is still flowing into AI, and as I said, quantum computing is needed in this space, and that is the one thing that is growing right now. I mentioned Rigetti, that is because I told you some time back that the Big Bear AI and Rigetti are two companies that I have in my portfolio. And I did some averaging on Rigetti, and that has given me a very, very nice return so far. Hopefully it will continue. These are among the longer term trends. I try personally to find what will be the next in the future. These short term swings are impossible to predict at a very good level, because it's about news. Some news will come out and the market will swing. Either it is oil currently sitting at $105, above what I think, but I still remain on the idea that by the end of the summer, come September, we will see oil at $40. And you, as I said, can hold against me. 10-year treasury yield is climbing up, and this is a little problematic for the market. Last week I argued that for Nasdaq to take a short reaction back now will be total natural. I think I mentioned 10%. It will be the natural thing to do. But Nasdaq and the signals, they are in balance, and it is an issue in general because there is so much positive sentiment in Nasdaq that it can just continue to 30,000. And 30,000 you heard in this podcast many times. But still, I believe that it should have a reaction back. And here comes some of the things, because let's say that US and Iran confirm a fixed deal opening the strait. I cannot understand why markets shouldn't push upward in the short-term picture, and they can even rally very, very hard. There is buy signals from all possible elements in Nasdaq, for instance, right now. So why couldn't it happen? The other thing is that this prolongs, and suddenly we get into that negative sentiment that can start to push Nasdaq down. I try to prepare myself for the situation where Nasdaq is going down. I've done a restructuring of my portfolio, etc., but it is still not happening. Nasdaq just keep pushing upwards. So far this week up 0.26%, not much, but still up. Dow Jones 153% up so far this week, and S&P 500 0.5%. It is still Friday. The market hasn't closed. I make this podcast on Fridays. Maybe I will go back to Mondays. I will think about it. So we haven't seen the end. The day haven't even started trading yet, so we don't know how the day will end. But so far it looks like it will be positive. And in the scenario where market will fall, because I have too much cash at hand right now, I want more into the market, but all the positions I look at are, in my opinion, very hard. Still, retail is the space where I see the upside. Dollar General, which I already have invested in. I've taken my 3 stakes. I will not increase it more, but still sit with a little loss. I started to buy Dollar General around 140. It fell way down to the hundreds and has slowly been pushing upwards, but my average is 111, so I sit in a loss in Dollar General. But American Airlines, which I gave the same arguments, these are stocks being beating. I started to buy American Airlines at $14. It went all the way down to 10, but I got a very nice average because I buy in several steps, not assuming that I will find the exact bottom. I just think that, okay, this is a stock I want to buy. And I am in the lucky position to actually have it's hard when you have $1,000, but you still can use this so-called dollar cost averaging technique, where you buy in steps rather than just pushing everything in one single buy. Trying to hit the bottom, or you use a relative strength index, you use support lines, you use the bottom of the trend, or whatever you do. Still, it's no guaranteed. So what I usually do, I find when they are at the level where I think there absolutely starts to be a chance that they will turn, then I buy one time, I wait a little, I buy second time, I wait more, I buy third time. Sometimes I buy 3 downs in a row, the stock just going down. And sometimes I buy and it starts to turn up, and I still buy while it goes up. But usually I follow the rule of buying 3 times to get into the stock. I did this for, as I said, I bought American Airlines the first time at $14, actually $14.32, fell down all the way to 10, but I bought much more at 10 and 11, currently at 13.59, making that as well for a nice profit. And if oil prices go down, which I believe they will, I think the upside American Airlines should be a double in my mind, but we will follow the stock. We'll see how it goes. Lulu hasn't turned out very good. Tesla, absolutely happy with the Tesla. It was a perfect buy. Currently sitting at $417, and I just think it will continue upwards. Personally, I wish to have more Tesla, and if it falls back down, let's hope for a market shake-up, so I can get more into Tesla. Tesla absolutely rank as the company I absolutely want to be very well positioned in for the future. Not the short term, but for the future. And many of you may ask, why Tesla? Why these electric cars? There is other car companies, but you have to remember that Tesla is much more than just a Tesla car. They are building some of the most advanced robots in the world, and robots is a huge thing coming up. We haven't seen it because it's just a few sideshows here and there showing the robot technology that is. But this will be main household items. I promise you that. It will go into factories. It will go into armies. Big scale already is. But these humanoid robots, which are getting better and better, they will come, and Tesla is in the forefront of this business. And they have built out power plant and doing self-driving taxis. They had automation for cars. Fun fact, I'm currently living in Lithuania, and Lithuania was the second country in Europe to approving Tesla self-driving. Happened 1 or 2 days ago. And even just the taxi market, the self-driving taxi market, is expected in US to be $500 billion worth. Starbucks haven't done any new changes there. Starbucks did all the things it should. I bought around 90, 89, 90, been in 2 times in Starbucks, currently $104. Chipotle stays very still at $32. It's a long-term position as well. Nvidia was never able to get into Nvidia. Stocks which I also have mentioned, which have been very hardly beaten, was Adobe, Beyond, DoorDash, and Aiva Technologies. And from these, Aiva is the one that is doing the best. But so many of the outbeaten stocks are showing signs that they will continue upwards. Back to the markets, and as I said, I believe there has to be a correction. I cannot understand why it will not be, but at the same time, Nasdaq and the volume is following each other, and it's such a good sign. So there is equal 50-50 chance up or down. It's very hard to decide. I'm just saying that it's overbought, has been overbought. A reaction should come. I'm not sure how it should come, because right now it's a higher chance that there will be some sort of peace agreements, and we are very, very close to a situation where maybe Iran and Ukraine both will come at the same time, and that will continue to spur the economic growth. And I will repeat it, to the boring level, I believe the decade ahead of us will be the best ever. There will be many changes, there will be a lot of disruption, but economically it will be the best. But also remind me of one thing that I did say. Europe, for instance, is not the best place to be, and latest economic data just shows that Europe is way behind. But Europe are currently being governed in a very, very special way, without going too deep into politics, and this is not changing. There are signs showing that it will change, but do not expect Europe to do anything great moving forward. Germany, which is one of the countries that I said in Europe, among the Germany countries, Norway for the shipping, and it is German for the reason that Germany has been moving, took the hardest fall of them all, and is the European country which I believe have the highest chance to give some good returns. But also their GDP was very slow, 0.3% was the last Q1 GDP, nothing much to brag for, but I still believe the same thing. If you are a long-term investor like I do, and if you want European stocks, I believe Germany holds a much better chance than any other European country, except Norway for especially shipping, container freights, etc., which I am very well invested into. Move that part aside, India is also absolutely market low, and the top of them all is US, because behind the scene, US is absolutely on top engines. When you read news media, especially mainstream media, you get the idea that everything is collapsing, but the numbers are far from that. I mentioned briefly that the signals didn't say much about the market, and here the signals are across all the tickers that we analyzed. 27% is giving buy signals, down from 32 last week. And Nasdaq still low at 18, meaning there is tons and tons of companies at Nasdaq with a upside potential. But this is the thing, money flows, talked about that before. When oil price is high, money flows out of airline industries, etc., and into oil companies, and when oil price is low, it flows out of oil companies into airline industries, everyone that is using, it's called correlation. You can find stocks that correlates, for instance, with the dollar, the cost of the dollar. The dollar is 116, and my bet this new year was that the US dollar will strengthen hard. I actually bought dollar at 119.5. It was up at 120, maybe even 121. Currently at 116, as I believe dollar will strengthen very, very heavily over the year. But it's been a very slow ride so far, but 116 against the euro, and I think it will continue to improve. Bitcoin had a little rally, then it fell back. Will be interesting to follow Bitcoin, and maybe I'm a little bit too well invested into crypto. Been slow. I expected more of crypto in this good scenario, but again, money are just mainly around the big tech. And again, Nasdaq, tons and tons of companies currently are not moving despite very good results. Attention is all about these big stock. New York Stock Exchange 28% buy signals, London 31, Oslo 31, National Stock Exchange of India is low at 13, Frankfurt 43. The reason why I think India is so big is we have to understand that there is a major shift happening. That major shift I've been speaking about for years, that it has to happen. We became too independent of China, and that we had to move production inland, at homeland. Why it's so needed? Because we are fueling China with this insane growth. Now they are close to the biggest military force in the world. Give them a few years and they will be. They push out 10 ships when previous US was able to ship out 1. Now that ratio has changed because US have changed. And Europe will not speak about Europe at all. But it's obvious that this disbalance in trade had to change. It will be for the better of the world. It may not seem like it when the prices of your goods is going up, but it is for the better of the world. A lot of home production. There will be home production, and this is also a long-term thing you can look into if you are into long-term stocks. Which stocks will, as this trade balance is slowly changing. US, for instance, is reducing their negative trade balance by the day, and meaning that more production is going on in US, more will continue. Which of these companies will take over the loss from China? What are the items that we order in China, except all that small shit from Temu? Which are the items that will be produced in homeland and make sure of growth? If you get in early, these companies will go. There is tons and tons. Remember, there is, I think that in total, if you look at the big and small, there is almost 14,000 companies listed on Nasdaq overall. 8,000-9,000 of them very tradable. Rest is just scrap. But among these companies, Nasdaq, there is tons of good companies. Same thing for Europe. And why argue about Germany? Germany used to be the powerhouse of Europe, got lost in social politics, got totally out of scope, showing signs that they are getting in. I don't know if it's good in the long term, but showing signs that they are reeling in. And when they get more things in place, I wouldn't be surprised if Germany fires up all, because right now they are in lack of energy, high energy costs, etc. But they will start to fire up and they will get back into production of things needed in Europe. Anything from bumpers to car parts to all of these things. And money will be made in different companies. India, as I said, National Stock Exchange, only 13% buy signals, and I wanted just to continue the argument. So why Europe will produce more, while US will produce more, we still will need cheap things. And India is one of the few markets left where you have huge arbitrage between cost of production and possible profit of production. China is slowly getting more expensive. Living conditions in China has increased. Everything has increased in China. Same with prices. And at some point you reach a level where cost of producing a good is so high that you maybe will just produce it at home or buy it elsewhere. And especially buy it elsewhere is a thing that we have seen. It has been moving around in Asian countries where we buy our clothes, for instance, been moving to several different countries. As one country starts to get too good, they get unions, they get everything, and then of course, as we are greedy as we are, we go for the next country that can offer better conditions at cheaper prices. And I believe just India is one of these countries. I have also argued a few times about special things in Africa, but right now I would say India is one of the places, which is India, Germany, Norway for shipping, and especially US markets looks super strong. What else is there to mention before we go to the $1,000 challenge? Well, it's about unemployment rate, etc., and inflation. Inflation is now currently around 3.5%, depending where you are in the world, and mainly driven by oil. And I gave these arguments that when oil price would fall 2 years ago, it was above 100 and around 90, and I said no, it will. Inflation will go down because oil will get down as US finally is energy independent again, and they produce much more than what they need, and they'll actually start to export a lot of more oil. This will drive oil prices down, and then inflation should come down. But as long as oil remain at 100, now it's $105, expect inflation to remain elevated. But if I'm right, oil will go down to $40. We will have the deflation, which I also mentioned so far, being very wrong about it. Was right first part of last year, but currently wrong about it. That we will get into inflation period with deflation. But I hope it will happen. Unemployment rate will increase around the world. It's a natural thing. AI is absolutely taking over a lot of workspaces. Efficiency among the individual users are increasing. And we see it in big tech. They are laying off huge amount of people as they do efficiency. This is a transitional period because AI will create tons of new jobs, but for sure in the very long term we are meeting two huge obstacles. It's humanized robots, which I just mentioned, and it is AI and other technology that somehow makes us less dependent on human. Why pay salaries to a person sitting there doing 40% efficient at work when you can hire an AI for 100 of the price, doing 100% all the time? As a business manager, these are the things that you have to live up to, and any company has to survive. It's about profit margins, this is about everything, and as this efficiency comes in, products will be able to lower the prices to scope up more of the market. Price strategy is it called, and it really works. And I believe as we get more and more efficient with AI, you will see SaaS products, they will drop their prices. You will see a lot of things drop in prices simply because we're getting more efficient and we want higher market shares. We start to reduce our prices to affect the customer. Again, going to this deflation theory. But we will see if, as I said just 12 minutes ago, I've been wrong about so much lately. I just hope my long lines will be correct so I can get back on track after my portfolio being hurt. And one thing that has hurting lately is NIO is in the $1,000 challenge. Last week was over $6.23. The challenge was 4,400 something. And today, as the podcast is about to begin, it is 560, showing signs of opening even lower, despite giving the best quarter they had and surprising every analyst. The expectation where they were losing 34 cents per share, they lost 2 cents per share. So everyone should be positively surprised, but market reacted negative. And that I cannot explain, only can tell that what I thought would happen is happening, except the stock price is not happening. And with the price at 5.6 right now, the $1,000 challenge is below 4,000 again at $3,942.72. We were up at 5,555 at very high. Now we are at 3,942.72, and I start to feel so ashamed, wondering if I even should just have a long break in this podcast series, because it doesn't reflect very well on me. Very happy that we managed to grow $1,000 to 3,942, but by this point I was expecting to be around 10,000. I could have gone into a million other shares doing way better than what I have been doing now. I've been arguing that I see NIO as a lower risk if markets collapse, simply because it's getting better and better financially, fundamentally. But come again, $3,942. Down almost $500 since last week. The fundamentals are there. NIO is in better shape than ever, and I cannot tell what is next because right now I feel lost. But I have a huge personal stake in NIO, and again, as I said, I have a lot of cash at hand because I've been selling other positions. I actually wonder if I will snap up a few more NIO shares. Maybe it's a stupid move, but NIO been moving up and down between 480, 680 very long, and this is a pattern that it holds. It gets higher, every bottom gets higher, so it's in a short and long-term moving trend up, has broken the long-term falling trend, so everything indicates that moving forward it should go up. Target is actually that by 21 months it should be up at $22 per share. I will have to think about what I do, but right now I feel very tempted, still knowing that I have way too much already. And this will be the final word of this podcast. If you have a huge portfolio, make sure that it's diversified. Mine is diversified. Lately it's not been doing very well. Some shares are absolutely doing very well, like Norwegian Shipping, etc. Rigetti is a good choice, but NIO has been pulling all these nice profits downwards. I bought NIO cheaper than 560, so I'm in profit in NIO, but if I look what I were last week or the week before that, my overall portfolio is going down. So maybe you should stop listening to advices from me. And there were not many advices this week about anything. That's how I feel about the market. The one thing that I always do is I hope your portfolio will be much greener by the end of next week than it was in the beginning of the week. I hope that you will be back. I hope that I will be back. And more than anything, I wish you a good week. Bye.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information you agree and are held liable for your own investment decisions.